Hi, it's Troy with IGC Realty and Rental Management, a real estate investment firm in Melbourne, Florida, serving all of the Space Coast and specializing in excellent property management services. Now, I'm here today to share with you another market update. If you've been watching these, you see we do them every month, and I've been kind of excited to share this with you because I really see our market beginning to change, and I personally am very excited about the market changing. It needs to stabilize out. And we're starting to see signs of that. In fact, I could even be bold enough to say that I really believe we're at the top of the market. I know that there's been a feeling that we've been there for a few years, but I think when I share the statistics with you today, you'll probably agree with me. So let's go ahead and get started and take a look at what's happening here in our June market update. Now here we are. Today is June the 8th, 2022. So we're going to be looking back at the statistics for May, and then we'll be doing some comparison from May of 22 to May of 21 and year over year. I'm also going to be looking to see what has increased or decreased in inventory just in the last 30 days, because we've had some radical changes in our local market in a very short period of time. I've said before, and I'll say again, I'm very excited about the changes because changes like this mean more opportunity for you and me as investors, more opportunities to build strong cash flow portfolios, and that's what it's all about. Let's get started by taking a look at our summary statistics here. Again, this is looking back May 2022, and we're going to do a little comparison to May 2021. Now, first of all, let's take a look at May, where our median list price was about $400,000, and our median sales price is $355,000. So we've got that same disparity that's happening between list price and sales price, and that's that disparity I've been talking about for the last couple of months, where the sellers are saying, I want this, it's my market, I'm going to hold this, but the buyers have reached a stalemate. They're going, but no, we're not paying more than this. And when you see the top of the market, this stalemate starts to create where the sellers say, I want this, and the buyers say, but I won't pay more than that. Ultimately, buyers usually win out. I mean, occasionally a buyer gets a little emotional and they go ahead and bid up and they overbuy for a home. But for the most part, buyers lock in and say, no, I can't afford that. In fact, we're starting to see more and more buyers hold out on their price, largely because of changing interest rates. Now, I can tell you on a home that I've recently put under contract, one of my own properties that I've put up for sale, I had people that made strong offers that backed out because the interest rate changed in just a few days, and that pushed them out of qualification. They couldn't afford to pay that. So I ended up not having multiple offers on a property and not having as many choices as I normally would have had. That's a sign that we've hit the top of the market. So here we are, top of the market. We're seeing some changes. Now, our median sale price in May of 2022 was $355,000. Our median sale price a year ago was $273,400. So almost a 30% increase in median sales price. That's huge. That is a massive amount of appreciation that's happened in the last 12 months. And usually when you see appreciation that strong, it's not sustainable. So again, we've got a couple of signs that we're hitting the top of the market. Number one, the disparity between list price and sale price. Number two, the rapid appreciation that we've had over the last year. And number three, just based on my own experience selling properties, we're not seeing multiple offers this month like we were last month, and we're seeing more and more buyers back out now because of changing interest rates, causing a big shift in our market. Let's take a look at this graph. I always like to kind of tinker around with this graph every month. This shows our number of listings. Now you'll see we've got two lines on the chart. We've got the red line that shows active listings, and if you look at that between April and May of 22, that red line takes a very sudden, very rapid jump upwards. We also look at new listings. Now, new listings has been trending upwards since the beginning of this year. You can see we were at our lowest point in December of 2021. It took a big jump to January, a smaller jump to February, a very large jump to March, a slight correction in April, and then a big jump again in May. So we're seeing number of listings increase rapidly in this market. That tells me we've got a lot of sellers that are trying to rush to market and beat the downturn. They're sensing it's the top of the market and they want to make their sell, and they want to make it now before it turns. Now, I think it's important to note also what's happening to our sold market. So this month, I've separated out the graph of sales from listings because I want you to see the downward trend that's developing in our solds. So look at the number of solds we've happened per month. Now, this has been kind of all over the place, but we've been right around that mid 1,400 mark for months, and it dipped down dramatically in January. You can see we've got the downtrend happening. March, April, May, our number of sold listings is trending down. Now, I find that very peculiar because springtime is typically a more aggressive season for home buyers. Spring and summer, when families are looking to relocate around the school year and several other factors, tend to make spring and early summer the peak home buying season. And yet here we are, March, April, May, we're springtime and early summer, and we're seeing a decline in the number of sales in our market. Now, I don't want to cast any fear on this. This is all good news. This is not bad news. Our market's not crashing. Our market is changing. And as you'll see as I step into some of these statistics, we need change. We need to get a more normal market. In a more normal market, you'll be able to negotiate better pricing, you'll be able to get better cash flow, you'll be able to make smarter, better investment deals. So this is all good news. This is pointing to the fact that our market is changing from an aggressive seller's market, and it's beginning to trend back toward a normal type market. This is really good. Now, you take a look at our price volume. In this graph, I've put our new list and our sold volume. And you can see the definite upward trend that's happening with new listings. It's been a very rapid increase in the upward trend, as we see on our brown line, from December to today, where our new listings is absolutely increasing. And you can see our sold volumes has flattened out and begun a little downtick. So definitely a correction happening in our market, something that I get very, very excited about because I do want to see a more normal market happen for all of us so we can get better deals. That's what it's all about as an investor. Now let's take a look at new listings versus sold listings, as I got these number charts up here. When I look at new listings first, I want to compare what happened this month in 2022, we're talking May 2022, to a year-over-year change of 2021 back in May. Now this is huge. Now overall, in our county, I can tell you that listings have had a year-over-year increase of 28% in Brevard County. That's a very large increase in a year-over-year type projection. That tells me we're in a shift in the market. All good news. But let's look specifically, May 2022, we had a total of new listings of 1,852 new listings that came on the market. That's compared to 1,583 from last May. That means we're 17% increase year over year for the month of May in number of new listings. If we compare that to sold listings, in May of 2022, there were 1,360 listings sold. Now, 1,360 sold, 1,850 listed. It's the first time in a while I've seen more listed in a month than were sold. That's a great change, and it's a change in our favor as investors. That means our sold listings year over year have seen a 5.6% decrease. That is wonderful news. That means we're heading toward a more balanced market. This is what we as investors want to see. We want to see a balanced market. We don't want to see that we have to overbid properties because we're trying to get an investment deal and not miss on an opportunity. I myself have an investment process that I had to overbid by $25,000 on a cash transaction in order to get the deal. And it was painful to overbid, but that's the kind of competition we had. I'm looking forward to a market where we don't have to overbid. Maybe we'll have to write multiple offers, but we won't have to overbid in order to get the deal. That means, as investors, a more normal market means we're a better chance of getting the price that we want to pay that makes sense as an investor. This is all good news. Let's take an overall look at our inventory for this month. Now, we currently have active. I'm not talking about how many properties were listed last month. I'm talking about current active listings that are available in the MLS Space Coast and competing Space Coast, what's available in our Brevard County or our Space Coast area, 1,442. Now, with 1,360 sales in May, that means we now have a supply that is greater than 1 month. Now, let me tell you how rapidly this changed, because if you go back 2 months, we had about a half a month supply, 0.54. You go back last month, we had a 0.74, 0.75, somewhere in there, about month supply. This month we have a 1.06. So we've been increasing. We've actually doubled our inventory in the last 60 days. And again, I want to point out, this is during the early spring, summer season when sales traditionally increase, yet we're seeing our inventory increase and sales turn down. Now, what we see here is a 30% increase over last month, and we had a significant about 30% increase from the prior month. So we're seeing rapid increase in inventory. That is positive news for us as investors and something that gets me very excited. Now, if you've been watching this, you know I also very actively track the rental market. We're seeing a lot of things happen in the rental market. Recently, a Goldman Sachs-backed hedge fund bought an entire community in Palm Bay, which is on the south end of Brevard County here in the Space Coast. So I believe that's like 65 homes. I might have that number wrong, but you can Google this and you can find this transaction that just happened, just made news a few weeks ago. But an entire subdivision, about 65 homes with their plan to turn it to rentals. Now that's a big scale, what I'm also seeing on smaller scales, because I've been seeing a large number of investors buy new construction homes for the intent of making them rental properties. What this is doing is it's putting more rentals on the market, and it's not really being matched by rental demand. So it's caused the rental market to stabilize. Now, if you've been following these updates, you know I've been saying our rental market has stabilized earlier this year, and the stabilization of a rental market is an early indication of a change in the sales market. Back in 2006, showing one of my own personal rental properties, I had tenants tell me, oh, I don't like the floor plan, I don't like the colors, and they could say that then because they had choices. And we know what followed in the crash of late 07, early 08 was because there was suddenly too many homes on the market. I started seeing those same trends happening earlier this year. We or my team would go out and show a home. We'd see people get approved for that property and then cancel their application because they found something else during the 2 or 3 days it took them to get their application processed with us. And that meant they had choices. We're also seeing more and more prospective tenants say they don't like the floor plan, they don't like the colors, they're wanting to negotiate things because they've got more choices. A definite early sign of a change in our real estate market. So because we're so heavily involved in property management and the rental market, and because I know rentals are an early indicator of where we're going with sales, we track our sales or our rental volume as well. Our current active inventory of rentals in our county is 488. Now, 488, that's up slightly from where we've been. So we've been seeing a slight increase in rentals, but what we're not seeing is the volume of rentals that are filling. So our actual closed sales or closed rentals that happened in April or May of 2022 was 335. So 488 units on the market for rent, 335 of them rented. That means we now have a 1.46, almost a 1.5 month supply of rentals. Now that's been increasing. That's actually a 21% increase from where we were last month. But we barely had a month's supply a couple of months ago. Now we've got a 1.5 months supply. So rental volume is increasing, or rental availability is increasing, but rental volume is remaining flat, sitting of 330 to 350 units a month being rented. So that tells me the days of aggressive rent pricing are over. We now have to price our rentals smart in order to get them rented quickly. It's still relatively easy to find good tenants. We just have to be a little bit smarter about targeting our market so that we can get that property exposed to the market as quickly as possible and then rented with a good tenant as quickly as possible, especially when we're seeing an increase in rental inventory happen on the market. Now, I do want to point out that we're not done with this seller's market yet. We still have a ways to go. When it comes to sales volume, if we've only got 1.06 month supply on the market, that's still very much a seller's market. That still tells me we've got more buyers out there than sellers. Now, to put that in perspective, let me tell you what a healthy real estate market looks like. A healthy real estate market should have about 6 months supply on the market. So what that means is if we're selling 1,000 units a month, there should be 6,000 units available in our local MLS. That's a healthy, normal market. Less than 6 months could indicate the market is shifting one direction or another. In this case, we have a very strong seller's market, but that's changing. Now, I do want to show this absorption rate graph that we look at because this goes back to July of 21, so it goes back a year. Now, you can see there that we did have volume of listings increasing up through about September, and then it started decreasing in the fall until it bottomed out in February and began its uptick again. So there is the possibility we could see that cycle repeat again this year. Although all indicators say that we are at the top and we're on our way toward a more normal market, we still have a long way to go before we get there. So if you're investing and you're looking to build your cash flow portfolio, I want you to keep this in mind. Know that we could be at the top peak of the market, so do not buy your rental property with anticipation of further appreciation. I think that appreciation game is over for a while, and we need to focus on cash flow. So if your property that you're looking to buy right now does not cash flow, my professional advice would be don't do it, because you could be stuck in an upside down situation waiting another 10 years for the next market cycle to come around again. You don't want to be there. So make sure whatever you're looking for cash flows today. If we do happen to get another bump in appreciation throughout the year, then consider that a bonus. But do not buy your investment properties counting on appreciation, especially in this market where interest rates and inflation are rapidly wiping out even strong and upper end income producers' income. So you want to make sure you have cash flow. And don't go for the blue sky. Don't let somebody tell you that rents are below market and they can be increased. Always make sure and do your own rental analysis so you know exactly what you're getting into. Because at the end of the day, if your property's not cash flowing, it's because you ignored the signs, and you never want to do that. So make good decisions, make smart decisions, and make sure that your property cash flows. And if there's anything we can do here to help you build a strong cash flow portfolio, feel free to give us a call. Or if you're local, drop by. We'd love to spend some time with you and help you build a solid investment strategy that can give you market-proof income with rental property for years to come. I'm Troy with IGC. I hope you enjoyed this month's market update. Stay tuned next month as we continue to watch this changing market and share more news with you.